Hello, I'm Dr. J, and this is the Volatility Sonar Report. The reason it's so important for you is this is like a heartbeat for the market, folks. It tells you whether or not we expect the market to go up higher dramatically or down lower dramatically. As VIX moves up, they're expecting dramatic moves. As VIX moves down, that means volatility is going to be more stable. The markets are going to be more stable. Here's today's report.
Welcome, this is your Option Monster Volatility Sonar Report. From the floor of the CBOE, this is Jamie Tyrrell of Group 1 Trading. Well, expiration is now behind us, and the broad market is having a pretty uneven day. We opened down small and have rallied back to unchanged, and the VIX is still sitting right at about 36. We had some questions about, now that expiration's passed, VIX is at 36, people start looking towards the future prices. If you pull up the chart, you can see May, the K future, June, and July are now front 3 months, are all pricing just about 38.5. It's a very flat futures curve. People are pricing similar levels of volatility far into the future. But there's a disconnect between that and the 36 level on the cash, about a $2.50 spread there. What you're seeing there is the VIX cash, since we just started this month, is still mostly comprised of May S&P 500 options. Now, the May S&P 500 options have really been trading at lower levels of volatility than the June, than the July, than the August. So as a result, the VIX cash is down, but the futures are not. By the time we get to May expiration in the VIX, our VIX cash will be comprised entirely of June S&P 500 options. So the May won't even be in the equation. So you can see the cash getting hammered down at 36, while the futures hanging strong up around 38.5, just because the cash has a low volatility month that is not going to be in the final calculation. The VIX futures are generally a better indicator of where people believe the VIX is going than where the VIX actually is at the time the VIX cash. In the options, we've had a decent level of trading today. There's been one big spread that has traded 5,000 times, and that has been the May 35 put against 3 June 30 puts. So in this case, the customer is selling the May 35 put for $125 to buy 3 June 30 puts for 35 cents a piece. So they're net selling the package for 20 cents. And their bet here is that they're hoping the VIX cash will stay strong around where it is for the next expiration cycle, and then something will happen and we'll see a big move down through that 30 strike in June. So they're hoping for rather steady volatility now, and then a big decline in volatility between May and June. That's the customer's bet. A lot of people in the crowd bought that. It traded 5,000 by 15,000 times, and they're still sizing up where the market is right now. They possibly could have more to trade. This is Jamie Tyrrell with Group 1 Option Monster.